Okay, so in the previous video, right, we have explained how the higher time frame influences the direction of price, correct? So this is the 4-hour chart on gold, and we can see, right, using the previous video's example to demonstrate how we can use the lower time frames to actually execute on and catch, large moves with a very good risk to reward ratio. So as you can see, right, just refreshing your memory, we can see that price pushed up. At any point in time, we are still bullish within these candles. When this candle form bearish and this next candle form bullish, we form support, right? So if you want price to reverse back down, what you should expect is that price breaks below this candle, closes below, give you possibility of retest and then continue down. That didn't happen, right? Price continue moving higher, right? And as you can see, the next candle here is bearish, and only when this candle form bullish, then we have a new support here, right? Once we form this new support here, next candle should respect this, respect and continue up, right? If we were to continue the bullish trend, but this candle break below this support. So this break below the support would let us think, right, or to infer that price will be shifting downwards, right? And as you can see, price did, correct? So if you take your entry over here, put your stop loss, all the way up here, right? You see this, and let's say, you target this area over here, this area, and then you just put it down here like this. You see your risk to reward is only 1, right? 200 or 300 pips stop loss, 1 risk to reward ratio. The amount of pips is huge, but guess what, right? You only get a 1-to-1, right? Percentages wise, it is not a sustainable thing. It is not good, right? So what we should do is to use lower time frame for your entries, right? So this is in the 4-hour. So let's mark, right, this candle close. So this candle will mark it here, right? And then we can observe the lower time frame. So this is 21st of May, 1 o'clock candle open, right? So this candle, we can start looking for lower time frame trades downwards, right? So one more thing to add is that any breaks above this line here would signify that our shorts are not valid anymore, right? A closure above here, above this resistance or supply, would mean that price would continue going up. And so in this scenario, let's drop down to the 30-minute time frame. So in the 30-minute time frame, what you can see, right? See here, 1 o'clock, 21st May, candle open here, right? So what we should observe in the lower time frame is the same exact price action, right? So here, once candle open, what do we see? We see price pushing upwards, right? Pushing up, closing above here. You see this? Closing above this 30-minute resistance or supply, right? Let me just delete this for a bit. Yep. 30-minute time frame, resistance, supply, price closed above as soon as the 4-hour candle opens, right? So what does this mean? On the lower time frame, it is not ready for price to go down yet, right? And as expected, you can see, right, if let's say you buy here, set your stop loss below here, and then you just wait it out, right? Of course I won't do this. I will zoom into the few time frame lower, right? You can see that you can actually catch 160 pips on gold, which is really a lot, right? Really a lot. And so when do you know it's ready, right? When do you know that price is gonna break downwards, right? So at this moment, you can expect price to be bullish, right? It will be bullish. And okay, so here now, if you see this, right, if you see this candle closing below the resistance, the demand, right, you can see a candle closure below here, right? So technically this would signify your down move, right? Like this, right? You would expect price to go down, right? You can take sell here, put your stop loss above here, and really target the lows here, right? The zone that we marked out earlier, right? And this is a 1 to 3 risk to reward. But I guess in this case, right, price stopped us out. Okay, so this is, I mean, this is not uncommon, right? Price will stop you out, but you know, you just wait, and then you just wait for a next chance, right? Because after all, right, the closure above here, a forward closure above here would then give you bullish price action, right? And you don't want to be caught here, right? If let's say, you know, you start thinking that, you know, buys are in place, right? You keep buying, you buy at every single level, right? Then when the price starts shifting back bearish, right, you keep buying, boom, and your account will get blown over here. So it's better to wait for proper price action. So even though you get stopped out here, it's okay, right? Just move on to the next trade. And even in this scenario, right, you see it is 2:30 Eastern time. So this is pre-London, right? London Open is at 3. So probably, you know, the volume wasn't picking up yet, right? Should probably wait for London Open to show you a to show you this kind of scenario, right? So okay, you know, let's just leave this here first. So just keep following price, right? Bullish price action, and at this point we see a bearish candle breaking the support or demand, right? So once this candle closes here at 11:30, you know, so this is the New York session, right? So once this candle closes here, price is bearish, correct? And as you can see, price remains bearish, and you can capture, you know, really good profits, right? So once this candle closes here, you take a trade, you can enter here, put your stop loss about here, and then you can target here. You can target here, which we would hit here, right? See, exactly at this area. You can hit here, giving you a risk to reward of 3.5, you know, which is really huge, right? Risk to reward of 3.5 here. And you can also take a trade here, right? You see, this was the previous break. This was the previous demand broken. And now this will be the area of interest, right? Areas of rejection, right? So you can take a trade here. You can even zoom into the 5 minutes, right? So let me illustrate how we can use the 5 minutes. You can go down to the 5 minute time frame. So this is the area, right? 30-minute area. You can use the 5 minute. Oops. Here, 5 minute. What can you see, right? When did price, you know, started shifting bearish, right? At this exact moment, breaking off support. Enter the trade here. Stop loss above here, you see, 36 pips. You just give it a bit of room for the 3 pips. Target the same exact area. And bam. Your TP is hit with a risk to reward of, you know, 9:1. So you can use the 30-minute time frame, you can use the 5-minute time frame to even get better entries, right? Based on what? Higher time frame structures, right? But if you see, right, if you get caught up with the lower time frame, because now you know that the 30-minute is bearish, you know that the 4 hour is bearish, but if your 5 minutes is bullish, will you really want to take that kind of trade? I wouldn't, right? So let's say you see here, get a break up, right? Price is bullish, you retest down. I mean, technically, you see, we are still bullish, right? We are still bullish. So you can probably refine it to the 1 minute to get, you know, this kind of move up, right? You can refine it to the 1 minute to get this kind of moves up. But I wouldn't do that, right? I would just wait for the 5 minute to become bearish again, enter, and then you can see, right, price moving down, right? So you can see bearish sort of price action, and then bam, right? You can see here this example, right? Price breaking below here, candle closure below, get a retest here, and you can zoom into the lower time frames, get an entry, right? So in this case, yep, 6:45 Wednesday, 6:45 on Thursday. So you can see here, if you zoom into the 1 minute, following the trend, okay, following the trend, those will be your high probability trades, right? Following the trend. 6:45. Yep, so we get a break here, around here, right? 6:30 break here. This is the 5-minute break earlier. This line, we get a retest up. And once price break below, you see for this entire move up, we haven't had a support being broken, right? We get a retrace up, closure below, support, entry here, right? The entry is here. Enter here. Stop loss above 12 pip stop loss. Very, very amazing, right? You can put it here, you know, you want to target these lows, you can, or you can even go lower, right? You can take partials there, you can take partials here, you can extend it here. Wow, right, 1 to 26. If you held it, 1 to 26 reward ratio, right? So imagine risking 1%, potentially get 26%, right? For every $10, you get you get $260, right? Which is insane, right? And if you're doing funded accounts, this one trade you can pass. You can easily pass, right? So this is the potential, right, of understanding higher time frame directions, using it to your advantage, zooming down to lower time frames and executing based on that, right?